There are a lot of people learning about business and schooling right now. Trading is becoming more and more famous, and more people are trying it out. To help you make a decision, I'm going to talk about 5 important things. Put money into a stock with the intention of holding on to it for a long time. Like 10, 20, or 30 years. This is called investing. It's true that stocks can lose value over time, but over time, they tend to gain value. Index funds can make big gains over a long time because of the power of compounding. Trading, on the other hand, is a game that you play quickly. The goal is to make money as quickly as possible by buying and selling things like stocks and cryptocurrency. To trade, the basic idea is to buy low and sell high. People who trade often sell goods in less than a week, a day, or even a minute in order to make money. You do not need to worry about the company's prices, the markets, or the ways it runs its business. Plenty of trade takes place in places where lots of people want to make money. 2 people who show the difference between an investor and a trader are Jim Simons, who is a market leader in trading, and Warren Buffett, who is a market leader in investment. Since he was a kid, Jim Simons has been interested in math. He got his PhD in math when he was 23 years old and went on to become a successful math professor at Harvard University. Once that was over, he joined the government and worked as a codebreaker while still teaching at a college near Wall Street. Simons used his mathematical skills to look at data and make guesses about how stocks would move as he became more interested in the stock market. In the beginning, he was in charge of hedge funds like Moneymanagement. After some time, he started Renaissance, a business where he hired scientists to make mathematical models for trading stocks. A number of the systems they made are now used in the area of artificial intelligence. At first, he had a lot of problems, but he finally made a lot of money trading. Because his medallion fund consistently gave profits of more than 100% over a long period of time. He became the best trader of all time and a billionaire. The story is about Jim. Finally, let us look at what Warren Buffett has done. His first investment was a value investment when he was 11 years old. He carefully studies companies before putting money into them by looking at their reports, sales, revenue, leadership, and plans for the future. To be successful, he waits years and lets his money grow, which pays off in the form of rewards. When Warren Buffett was 50 years old, he had already made a lot of money. Traders have to pay taxes and fees every time they make a sale. But investors like him get tax breaks for holding on to their investments for a long time. Some people, like Warren Buffett, think that selling is a skill that only smart people can fully develop. For example, Warren Buffett, a value investor, talked about the difference between a gambler and an investor. Of all the traders who start out, only 16 make money in the first 6 months. Trading is a dangerous thing to do. It's necessary to have a full-time job that pays well and pays poorly. The risk of investing, on the other hand, is smaller, especially when it comes to long-term investments that pay off over time. Even though investing can make you up to 15% a day, it is hard and there are risks involved. Investing, on the other hand, gives you gains that are usually between 8 and 12% per year. Fundamental analysis is an important part of investing. It looks at the details of a company and how it has done in the past to predict how it will do in the future. When you're investing, you need to know about technical analysis because it uses charts and market news to predict how stocks will move. If your guess is right, you will make money. If it's wrong, you will lose money. The basics of the business are not the main point of this. Even though a lot of people trust their gut, technical research could be useful. They guess and trade, and there is an equal chance of winning each time. In the end, most people lose money. We can't say enough about how important this is. You should think about your goals, your current financial situation, how comfortable you are with risk, and how committed you are to the stock market. Trading and buying are tied together, but they're not the same thing. When compared to trading, which has a lot of risk and a lot of reward, buying has less risk and takes less time. Most of the time, trying to make quick money ends up costing you money. If you want to get rich, investing for the long run is best. If you need to make quick cash, you could start a side business or learn how to build social media sites. You should invest the money you make for the long run. Even smart people should not trade because it is dangerous. Trading is all about making quick money by buying and selling things quickly, like stocks or coins. To sum up, long-term investing is the best way to build wealth steadily, while trading has high possible returns but also high risks. Thanks for watching.